Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for March the 15th, 2011. Now our first position for tonight is going to be, or this morning depending when you're looking at this, is going to be in the rough rice contracts. We're looking at a day trade here. We're not going to get too aggressive with this. Now what I want to point out here is that this thing has been on a steady decline since the 1650 level. We're getting into extremely oversold territory on both the predicted MACD, the predicted true strength indicator. We can see that the predicted short-term difference is beginning to cross and move back to the upside, as is the predicted short and medium-term differences. Now, what I want to point out here too is that the predicted high-low break has been consistently breaking to the downside. However, we've broke to the upside here today. So now looking at a little closer into this now that we've identified that the high-low break has finally broke to the top side after all this time, it's starting to look like we could have a little bit of a reversal here, at least in the short term. So for tomorrow, let's have a look at this. We've got our neural indexes pointing up after 2, 4, 5 consecutive days down. We're sitting for tomorrow. We've closed at about 13.19. We've got a low for tomorrow of 13.0380 as suggested by Vantage Point, and a high of 13.30. So we've got a decent day trade here. We don't want to get, I'm not sure how long we want to hold this one for, but there certainly looks like we've got some upside potential. Now the strength, the downward trend is definitely running out of steam. Looking at our short-term crossover, we can see that it's starting to turn up to the upside. Our medium and long-term crossovers, though, you can see are clearly to the downside. So what we would be looking at for here in the day trade is, like I said, around that 1330, 1345 area. But now looking at this from a longer term, we want to bring up the triple EMA. Now looking at the triple EMA crossover, we can see 1377, 1329, and 1305, and with a close of 1319. So we've cleared the first predicted moving average from Vantage Point, the 3-day. So we're going to be looking for tomorrow for a move to slightly clear the 8-day predicted EMA. That's our target for tomorrow. On a slight pullback, we would buy when we get up near this area. Of course, being a day trade, we would look to get out at that level because we're still in a pretty substantial downtrend. But looking at this again, looking at putting Vantage Point's predicted high and low for the day here, if you notice the angle of the red and the black line is starting to turn and point straight up, you can see when it's done this in the past, there's been a fairly decent move to the upside, but that's also happened to the downside. So again, we have to watch both sides. But for tomorrow, we're going to be again looking at that 1302, 1303 level, and then a move to the 1330. So that's our first position for tomorrow. Now our second trade for tomorrow is going to be in the foreign exchange market. We're again going to be looking at the US-Japan currency pair. My view on this, probably, the market is split on what they think of this currency pair. My opinion is the yen is really not worth it's not worth much. We may get a little bit of repatriation of funds back in, but at a 200% debt to GDP ratio, the yen is certainly not looking very good to me. Now we're probably going to see some further downside, but we should also know that the Bank of Japan is watching the downside very closely. Sunday night we pushed into that 80-70 level, and in a blink of an eye it was back at 82. So it's my opinion that the Bank of Japan and possibly even other central banks are going to protect that yen, and they're going to try and keep it from gaining too much more strength. Now we may see a test of the 80 level. I can't be sure of that, but I really don't think so. I think that any time that we break below 81, the risk of intervention is very high. And like I said, there's very little things that favor the yen right now, other than the repatriation of funds, which may not come right away. And when they do come, they may not be the amount that what we think it will. So there will be some demand for yen, but at the same time, the value of that yen, we have to really look at it. So we've got a very mixed bag here from Vantage Point. Our triple EMA cross is to the downside, so this is a day trade. The predicted high-low break is broken twice over the last 2 days, but again on extreme volatility. So the yen has given up. If there's been some repatriation of funds, there's been quite a bit over the last since Friday. So we want to keep that in mind also. Now our short-term cross is to the downside, but as you can see from vantage point, those are the only two crosses that are to the downside. The medium term and the long term are not putting out a confirmed sell signal. Neither are the predicted medium and long term differences. Now the predicted MACD is crossed to the downside, but the predicted true strength indicator from vantage point is essentially running flat. So the picture is never as clear as what we might think it is. Now the dollar short trade, that's a very, very crowded trade. I also want to point that out. So we want to be, we don't necessarily want to follow the crowd here. We want to look at the real, not just the technicals, but the fundamentals here. And the fundamentals certainly don't favor the yen in any way, shape, or form. So going into the daily report from Vantage Point, we've done a fairly extensive look at why we think it's going to go the other way. Our neural index, of course, is down for the second day. 81.19 I think is a reasonable area to think about getting into the long position. Stops, in my opinion, should be about the 79.90 area. That's the last point of intervention by the Bank of Japan, even though my opinion is they kind of intervened Sunday night by announcing those the 7 or 15 trillion that they were dumping into the liquidity for the banks. So when you have that kind of stimulus going in and you're already facing the kind of debt that that Japan has, which is nothing. The US's debt is nothing compared to what Japan's debt is, and obviously that's going to accelerate here. So 81.19, we're going to be using about a 100-point stop. We would like to see buying off this 81.19 area. 82.28 is the initial target, but over the coming weeks and months, certainly 84 to 86 level is what I would be targeting. And certainly I'll be looking at those longs myself. I'll be buying down into the 78 level if such a thing were to happen, which really I just don't see it. The Bank of Japan is certainly on intervention watch, as are the other banks. So we'll see how this plays out. But again, I have to favor the longs here based on the fundamentals, not just the technicals. So those are the market positions for March the 15th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.